Hello, this is Gary Schnitke, and this is a 5-minute Farm Doc Daily dealing with the 2021 crop insurance performance. We judge crop insurance performance by loss ratios. A loss ratio equals total payments on crop insurance divided by total premium paid on crop insurance products. A ratio of 1 is the benchmark, and RMA, Risk Management Agency, sets crop insurance premiums so that over time loss ratios should average slightly below 1. The 1.0 is a benchmark. If we have loss ratios below 1.0, payments are less than premiums. If payments exceed premiums, then we have loss ratios above 1. In 2021, the loss ratio for the U.S. entire crop insurance portfolio was 0.68. This was a very low loss ratio and was below the 0.84 10-year average and also below the 0.77 5-year average. So 2021 was a low loss ratio year, or low losses, for the entire crop insurance portfolio. Illinois had a particularly low loss ratio of 0.13. This was again below the 10-year average, which was 0.84. That 0.84 includes that drought year of 2012, and which was the year with the highest loss ratio. The last 5 years, Illinois has averaged 0.37. Again, a very low loss ratio for a 5-year average, and 2021 was exceptionally low at 0.13. Overall, most of the United States loss ratios were below 1.0. That was particularly true in the Midwest, Iowa, Illinois, Indiana, and Ohio. The one area where we had loss ratios above 1 was in Montana, North Dakota, South Dakota, and Colorado. That upper Great Plains area had a drought, and wheat in particular, although corn and soybeans loss ratios were above 1 as well, but wheat in particular had large loss ratios. In Illinois, again, we had very low loss ratios, and our highest loss ratio happened to be 0.69, which was in Cook County. The lowest loss ratio area was in east central Illinois, where we had very low loss ratios. For example, Champaign County had 0.03, Piatt County had 0.03, and Douglas County had 0.01. Again, that was a very low loss ratio area. Part of the reason, or the main reason, why we had low loss ratios is both corn and soybeans had low losses. Both those crops, corn and soybeans, the predominant policy that's purchased is RP, revenue protection, and in 2021, the harvest price was above the projected price. That would indicate that a yield loss had to occur before RP would make payments, and last year we had above trend yields, or trend yields and above, over most of the Midwest and over most of the United States. Again, if we're looking at corn, we had a low loss ratio, 0.37 for 2021. Illinois had a low loss ratio of 0.12. Similarly, soybeans, like corn, had low loss ratios, 0.44 for 2021 and for the United States, and that compares to 0.57 for a 5-year average and 0.55 for a 10-year average. Wheat had higher loss ratios over the entire U.S. Wheat averaged 1.60. Again, the drought in the upper Great Plains contributed to that, and that was above the 5-year average of 0.88 and above the 10-year average of 0.85. 2021 was a low loss year across the United States, primarily because corn and soybeans had low losses in those years, and Illinois and the Midwest had a particularly low loss year in 2021. You can read more about this in the Farm Doc Daily, linked to the description in the video description below.